JSE facing weaker Asian markets on today, but the rand strengthening through the 14 rand 50 against the dollar mark. Hawkish Reserve Bank commentary yesterday has helped support the local currency, which is looking to cap off a week of conservative gains. Roy Mutooni is an analyst at Absa Asset Management, joining us now to give us a sense of how the JSE is performing in early trade. Roy, good morning to you. How are the markets doing this morning?
Good morning, Xoli. The market's actually quiet today. It's looking a bit flattish. You've seen a bit of a sell-off among the precious metals, both gold and platinum as well. There's a bit of a few of the domestic industrials and the banks are rallying a little bit, but overall it's flat markets. Like you said, the rand is at about 14.50, looking strong again, building on the gains from yesterday, but relatively quiet going into the weekend.
Let's talk about those oil prices, or the story around oil, Roy. It's edging lower as supply fears ease. At the same time, if we look at other commodities like gold, it's on track for its weekly gain. Talk us through those moves.
So the move around oil is basically trying to balance between supply and demand. Right now, the Europeans seem very reluctant to engage in greater sanctions against Russia, because if you remove that Russian oil or gas from the market, it's very difficult to replace, and the only way you balance the market is through higher prices. I think at the meeting yesterday with Biden, they expressed this reluctance, and I think that's why you've seen oil prices tracing back. Even European gas prices have tracked back just from this perspective that Russian gas and oil will not be removed from the market more than it is right now.
Yeah.
On the other side, when we look at the other commodities, gold is always an indicator of uncertainty. There's still significant uncertainty. This war has not been resolved. Russia doesn't look like it's backing off. You're still seeing moves. I mean, Biden is going into Poland today, which is a proper frontier state from the perspective of this war. So gold is your safe haven, and it looks like it's going to receive a lot of support. As well, inflation remains a big bugbear. And at times of inflation, people run to stores of value, and the only store of value that we have right now is precious metals and gold specifically.
Let's talk about the multilateral institution that is the IMF, which is urging more prudent policies to be maintained by South Africa, especially in the wake of the highly uncertain global environment. What exactly are they warning about?
So I think actually what they're doing is giving great kudos to the Treasury and the Reserve Bank on how they've been able to handle all these periods of uncertainty. If you remember, when we had the COVID disaster, first the COVID pandemic initially, the Reserve Bank cut interest rates aggressively to 3.5%, which was supposed to allow liquidity and allow the market to thrive even in an uncertain environment. And now you've seen, in response to the ending of the pandemic and also increasing inflation, they started hiking rates. From the Treasury perspective, they went out and did a lot of social spending during the time when people couldn't work during the lockdowns. And even now, when they're getting the benefit from the commodity boom, they haven't gone out and blown all of that money. They seem to be using it very responsibly, kept up the social spending, didn't hike taxes, and planned a little bit in terms of reducing debt and managing the fiscus a whole lot better. So I think what the IMF is saying here is, well done. You've handled it incredibly well now. This isn't the time to lose the plot. This isn't the time to be overly generous or overly cautious. Just keep on the path, and SA will be able to navigate its way out of difficult times. Very unlike what's happened with others. The fiscal situation remains sound. The debt situation remains under control, and taxes are not totally out of reach. In fact, an interesting thing is they're actually considering now cutting taxes to manage the fuel price, which I think is a brilliant thing if they're able to do it at this time, which will impact inflation, allow people to continue planning their lives, and not impact growth that much.
Indeed, and it's a welcome relief, I'm sure, for
Absolutely.
South Africans, ordinary South Africans like myself. Let's conclude the conversation, Roy, around company news. SAB planning to invest almost 1 billion rand in upgrades. Talk us through those developments.
So that's an interesting one. Remember, during the pandemic, they pulled about 5 billion rands worth of investment because they were saying if we can't sell alcohol, we can't pay salaries and all of that. But it's one of those things that I think the private sector has a continuous conversation with the government, and somehow they come to an understanding. So they've said that they're going to now invest $1 billion. They invested about $2 billion earlier on this year or late last year. But also remember, Heineken is coming into the market quite aggressively as well. So I think they've got one eye on the competition and one eye on the benefits that they got from the budget, whereby sin taxes didn't go up too significantly, and also the fact that they're big corporate citizen here. So I think it's a balancing act. They need to be in the good books of government. They need to compete well against competitors who are coming in. And put all of this together, they need to grow their business. So it's an interesting announcement, particularly that it was made during the investment conference. Means they want to be relevant and means they want to continue investing in SA.
Roy Mutooni, thank you very much for that markets update. Analyst at Absa Asset Management.